Welcome back to the Digital Asset Report. Institutional Bitcoin adoption is accelerating and the momentum shows no signs of slowing. This week, Tokyo-based Metaplanet became the 10th largest publicly traded Bitcoin holder after purchasing 319 Bitcoin for roughly $27 million. The investment firm now holds 4,525 Bitcoin with an average acquisition cost of $90,194 and a total cost basis of $408 million. This latest buy is part of the broader trend of corporations positioning Bitcoin as a core treasury asset, a strategy aimed at preserving value and enhancing shareholder returns. Meanwhile, Michael Saylor's strategy is doubling down with its third consecutive weekly Bitcoin purchase, acquiring 3,450 more Bitcoin. Strategy now holds 531,644 Bitcoin worth roughly $45 billion, making it the largest corporate Bitcoin holder globally. To finance these acquisitions, Strategy continues to sell equity through its at-the-market program, which allows for up to $2 billion in share issuance. Strategy shares rose 4% Monday to $312, lifted by optimism in tech markets after the White House temporarily exempted smartphones and computers from sweeping tariffs. The tech-heavy Nasdaq jumped 1.5% on the news as well, signaling how traditional markets and Bitcoin-adjacent stocks are increasingly sensitive to macroeconomic policy shifts. However, President Trump clarified that the exemption may be temporary, with new levies on semiconductors expected soon. Meanwhile, the value of the US dollar continued to fall on Monday, down 2.8% since Thursday, with the dollar index reaching the lowest levels since 2022. All this volatility underscores just how interconnected crypto and traditional finance are quickly becoming. But zooming out from just the policy headlines, there's something deeper at play here. We're at an inflection point in global finance. What we're seeing is not just temporary turbulence. Ray Dalio warned in an interview with NBC News on Sunday that we may be witnessing a full breakdown of the monetary order as we know it.
We have something that's much more profound. We have a breaking down of the monetary order. We are going to change the monetary order because we cannot spend the amounts of money, so we have that problem. And when we talk about the dollar and we talk about tariffs, we have that. We are having profound changes in our domestic order, how ruling is existing, and we're having profound changes in the world order. Such times are very much like the 1930s. I've studied history, and this repeats over and over again. So if you take tariffs, if you take debt, if you take the rising power challenging the existing power, if you take those factors and look at the factors, those changes in the orders, the systems, are very, very disruptive. How that's handled could produce something that is much worse than a recession.
Dalio is, of course, famous for accurately predicting the 2008 financial crisis. If he's right again, the context of a global reordering changes everything. Bitcoin, monetary policy, fiscal limits, even governance. The stakes are bigger than a market dip or a policy adjustment. We're talking about real systemic change, the kind that Bitcoin was made for. So what role will Bitcoin and digital assets play in a world where fiat currencies are becoming increasingly volatile? Bitwise CIO Matt Hogan has a hot take.
When I watched all the tariff confusion play out, and what will Trump do, and what will China do, and how many bilateral deals will we negotiate, the thing that's clearest to me from all that is that we should expect the US dollar to move lower, that we're moving from a world of the US dollar being the sole reserve currency to a world with potentially multiple reserve currencies. Bitcoin benefits when fiat currencies go lower. Bitcoin benefits when there's new space for reserve assets. I think it's the cleanest investment response to the chaos and confusion we're seeing from this tariffs, specifically because it's the hedge against fiat currency debasement. And I think we're setting up for that in the US, in China, in Europe, and around the world.
That perspective gets right to the core of what's happening. Bitcoin is increasingly being seen as not just a financial asset, but as a hedge, a reserve, a strategic response to the instability of legacy systems. And regulators are hard at work trying to keep up with how quickly things are changing. This week, the SEC's Corporate Division of Finance released a new statement clarifying how existing disclosure requirements apply to crypto-related offerings. While it stopped short of changing the law or interpreting the how we test, the statement provides guidance on business models, risk factors, and investor protection. Commissioner Hester Pierce called it a small step towards smarter, more transparent investor communication. At the same time, the Trump administration made a landmark move by repealing the IRS's DeFi broker rule, and the repeal became the first ever crypto-specific bill ever signed into law. The rule was finalized under the Biden administration and would have required decentralized platforms to report user data like traditional brokers. Its repeal is hailed by industry groups as a victory for privacy, innovation, and American competitiveness in crypto. Meanwhile, geopolitical signals are further amplifying crypto market momentum. On Monday, a high-profile meeting between President Trump and El Salvador's President Nayib Bukele was shared on the White House X account, sparking speculation around deeper U.S. engagement with Bitcoin. Within the hour, Bitcoin surged 3.5%, with trading volume spiking across major exchanges. On-chain activity also jumped, with a 10% rise in active Bitcoin addresses. The meeting underscored how Bitcoin continues to evolve, not just as a financial asset, but as a geopolitical instrument influencing statecraft and global alignment. Across corporate treasuries, regulatory policy, and diplomatic headlines, it's clear that Bitcoin is moving from the fringes to the foundation of finance. That's all for today. If you found this video helpful, be sure to give us a like and follow, and head over to bitgo.com to learn more.